Hey everybody, what's going on? Want to do a quick review of one of the trades that I got in. I got in two trades yesterday. One was for DataDog and the other one is for Apple. The Apple trade is still going, but I'm already out of the DataDog trade. So here is the setup. So this is what the bar looked like yesterday when it closed. This is the daily chart. And again, still got the 13 and the 30 on the chart here. So this was just like golden. Now I forget what the name of this setup is from like a bar perspective, but basically when you got a bar that finishes up high like this the day before, and then you get this little guy right here, it's almost like another test. But basically what it shows is that all of this buying momentum was legit because yesterday the price did come down some, but it worked its way back up. And that means that the next day you're probably going to have higher prices, and that's what's happening today so far. Let me show you what I saw to get me in the trade on the 15-minute chart. Right here we got the crossover that we've been talking about. This is the white line is the 13 SMA, the blue line is the 30, and as the 13 crossed over the blue line, that let me know that yeah, the price is genuinely headed higher. And I looked at that along with the hour chart to make sure there's nothing funny happening on the hour chart. And here on the hour chart, you can see that this line is basically acting as support for the price. So again, this is the 13 now on an hour chart. Price is just like bouncing off of it basically. And the primary thing for me after all of those things is volume and how the price closes for the day. So here we go again. The close you can see is up near the high. It didn't close too far away from the high, which is a good sign. That means that there's some solid buying. And then the volume was decent. It was basically average volume, which is good. That means that there was some regular trading in there, meaning like just everyday traders like you and I. And there was some big professional traders in there as well. The Goldman Sachs of the world also contributing in this move because we got some decent volume. And it went right up. And then actually I want to show one other thing that I look at. So I trade with Thinkorswim. Well, actually I use Thinkorswim for all my charting. I do have some other trades in Thinkorswim, but those are long-term trades. The stuff that I do daily just in and out is normally through Robinhood. But I use Thinkorswim to set up all my charts and everything, and that's what this program is called. You can get it through TD Ameritrade. But on Thinkorswim, you can look at the options page, I guess you can call it, and it shows you all the options prices. You can look at the delta, the volume of the options and all that stuff. But then down here, this is another critical thing that I use to find out if I'm going to get in a trade or not. This is the breakdown of how the options have been bought, like the range that they're being bought in, the amount of calls versus the amount of puts. And if you look at Datadog here, I should have took a snapshot yesterday, but it was a similar setup where there's way more call volume than there is put volume, which doesn't necessarily mean that the stock is going up until you start to look further into the details. And you can see right here that says the bid is what the price was traded at versus traded at the ask. The bid is the selling price and the ask is the buying price. So when you see that 19% of these 29,000 calls, 19% of them were traded at the bid price, and then 25% of them were traded at the ask price, that means that there's less selling of the calls than there is buying. And that should mean that if people are buying calls, they think that the price is going to go up. It's not 100% accurate, but I use it a lot and it works pretty well for me. Then you can also look at the delta to see where the options are falling as far as being in the money or out of the money. And I typically want stuff to be in this 41 to 60 or even 21 to 40 range for the delta to have that be the highest percentage in the direction I'm going. So for calls, I want these two numbers to be the highest percentage. And then I also want the put number to be the highest percentage the furthest out of the money, because then that means that people aren't interested in the price falling in the near term. If they do expect it to fall, it's way out in the future or something, and they're buying stuff from next week. So I'll get more in detail in this in a different video, but that was another thing that I saw. So let me just show you, let's see where Robinhood is. me just show you the trade. So this was a cheap trade. I didn't actually spend a lot of money on it. I only spent $616. I bought two contracts at 308, and I bought them at 3:55 p.m. yesterday, and then I sold them this morning at 9:34, and I sold them for 406 a piece. So I made 812. So I put 616 on the line and then sold it for 812. I definitely could have made a lot more, but I didn't want to be greedy. It did get a lot higher than where I sold it. I think it actually got all the way up to like $6, which would have been like another $200. But I didn't want to be greedy, and plus I was trying to watch this Apple trade. And once the Apple trade's over, I'll give you all an update on that too. All right, thanks for watching. Make sure you hit subscribe, hit the like button, and check below for the Robinhood link so you can get a free stock, and I'll get one too. Peace.